Taking back America, one consumer at a time. It's the Krieger Files.
Okay, we're back after the break. Fred Dashevsky with USCoinCapital.com joins us this morning. Kind of doing a after the first of the year recap as to what is going on and what we can expect. Fred Dashevsky, welcome to the show.
Hey,
Happy New Year.
Good morning, Dave. Happy New Year.
Happy New Year to you.
25.
Oh, I know it. You know, I just was wondering how we would all survive it. And of course, folks, I bought my when Fred had that last deal out there, I did stock up on the silver dollars, on the peace dollars, and boy, do they look shiny, Fred. I love them.
Yeah, they're beautiful looking coins. You know, there's just nothing more impressive than a dollar, a real dollar, constitutionally issued dollar, made of silver that you can hold in your hands. When you kind of look at it, it just seems to simplify the whole concept of why, you know, gold and silver coins were always the intended form of money.
I know it.
The discrepancy between it and paper just becomes clearer and clearer. But yeah, I love those old peace dollars. They were really cool.
I gotta let people listen to this. You ready for this? Listen, put your ear to the radio. Here we go. You hear that? Did you hear that, Fred? I'm gonna do it again. Oh, that is the sound of silver, baby. I love it. I had to do that, Fred. I had to do that just to let you know. I got it because, I mean, that is, you distinctly know it's a silver coin just because of the fact that, you know, it has that clanky sound when it hits the table. I love it.
And if you know how to do this, if you can ping a coin off of your thumb, get it to spin up in the air, you know, like crystal, if you were to ding crystal with your finger, it resonates. It has this reverbing sound, and it actually has a specific note that it plays. The same thing with real gold and silver. If you actually flip a coin on your finger that isn't silver, it thuds. You know, you just get a kind of a dull thud. But if you ping one of those silver dollars, it'll ring. It'll actually like ping, and the ring will, you know, last for a couple of seconds. You can actually hear it. It's very cool. It's just a unique property of pure metals.
And we have to carry this, and we should carry this, and this is one of the reasons why Fred comes on the show, because we talk about the economy, and the last distressing news that I reported last Friday before we went off the air for the weekend was the situation with the mortgage rates looking like they're headed to 7% again. What's going on, Fred?
Well, you know, that's interesting, because the last move of the Federal Reserve is to lower rates by a quarter point. You know, you would think that would put a little downward pressure on the mortgage market. But first of all, there's always a lag time, you know, and it could be 6 months between what the Fed does and when it begins to have an impact on the economy. So that impact it has on the mortgage rates may still take place. But, you know, there's also other factors that are involved, and a lot of it has to do with supply demand. And we know that there is a shortage of real estate. It's putting a lot of pressure on the markets. So, you know, rates did creep up a little bit. And again, we have to give kudos to all those people who were smart enough to lock in those mortgage rates last year when they were down in that 3.5% and 4% range. I mean, what a brilliant move that turned out to be. Those mortgages themselves actually have a value as a financial monetary asset, you know, because they're such great instruments to be able to borrow money at that low rate. And I've been finding some interesting stuff starting off the first of the year. Beginning with this little proposal that's coming out of Argentina, which to me, I think you probably know too, is like the poster child of a country doing everything wrong with their dollar, you know, with their currency.
Right.
Argentina, of all the countries out there, has probably had some of the worst inflation anybody's ever experienced. You know, we're talking like 900 to 1,100% annual inflation. So the president, Javier Milei, is now proposing that what they want to do is they want to institute a rule that says if the legislature or anybody involved in the central bank monetizes debt and creates inflation, they're going to make it a criminal offense. And they want to make it so that these guys, if they do this, would actually face jail time. So they're really trying to apply pressure on those that are able to make these difficult changes and put it on them to actually be responsible for their actions. And I was just laughing at the idea of the United States trying to institute a similar. Can you imagine if we went to the new Congress and said, okay, here's the deal. If you guys cause inflation or if anybody within the central bank monetizes any national debt, you're going to jail. So we want you to really control this to the point where we're going to threaten you with jail time. I thought that was an amazing thing to come out of, especially a country like Argentina.
Well, no doubt. And see, they're hailing him as a hero for what he did turning the economy around. But the other thing I'm looking at is what's going on here, because we had 3 more countries over the first of the year that entered into the BRICS agreement. And these, of course, are all East Asian, Asian Pacific Rim type stuff. But, the thing is, I'm looking at what Trump was saying about, making changes to our system and the way we do things as far as the debt ceiling goes. And I think there is some misunderstanding about how the debt ceiling operates, because, see, it isn't our debt. It's the federal government's debt. It's federal debt, not national debt. That would be a fair statement.
That would be a fair statement. So, what we're talking about with the debt ceiling is the government has spent money and it doesn't have the ability to pay it. But like what has happened in Argentina, what you're getting here, the big picture, is that they're trying to create an environment that would curtail this just simply overprinting of money by every country around the world, which is basically what's been going on for the past 5 or 6 years, that every country has been monetizing debt and just printing and printing unbacked money. So we're trying to make it responsible. So what the U.S. did is it said to Congress, okay, look, you have your budget, and if you spend more than this, we have to start instituting some sort of procedure to just stop the bleeding. So we're going to require the government shuts down, or you're going to have to make some substantial changes to the spending side of things. And every time we get to this limit that Congress has, subjectively set itself, they fold and they say, well, yeah, we said we wouldn't spend more than this, and that when we got to this point, we would start making these dramatic cuts. But you know what? We just don't have the balls to deal with it. So we're just going to kick the can down the road and raise the debt limit and allow us to spend more. What people forget is that this is money that's already been spent. We're not debating whether or not Congress should be allowed to spend new money. We're talking about Congress's ability to pay its current debt. And it ran into this problem toward the end of the year. We had one of those, again, emergency sessions where they have to raise the debt limit. But I think, overall, the thing that struck me as most interesting coming out of last year, I think the largest significant economic event was the fact that the Federal Reserve managed to almost pull off that quote-unquote soft landing. They managed to lower rates enough and not set the country into a recession by waiting too long. We got away with it throughout 2024. We didn't have this massive recession. And it looks like, there's strength going forward in the economy now, and the Fed has gotten this interest rate cycle a little more under control. I think the rate drops are going to be few and far between this year. As I said at the beginning of last year, everybody was piled up on this idea that there would be 4 or 5 rate drops in the spring, and I just sort of poo-pooed that whole idea. It didn't seem likely to me at all, and it turned out I was right. We didn't even touch a rate drop until end of fall, and we only got 2 of them, and they were both little quarter-point rate drops, so nothing dramatic. But the event of last year was the Fed managing to not send the country spinning into a recession. So if we can pull anything good about what happened last year, at least we didn't have that. Because had the country spiraled into a recession, the Fed would have had to somehow plummet interest rates and do kind of like what they did in 2020, massive economic stimulation, which we now know, of course, is very inflationary, and that translated into that massive inflation we all saw in the last couple of years. So going forward this year, it's going to be pretty interesting to watch how the Fed proceeds.
I agree. And the thing that I was also looking at, because I've had a lot of people emailing me saying, Dave, you think that Trump is going to do a debt jubilee? And I'm like, yeah, I don't think the banks are going to let him get away with that. What do you think?
Well, debt jubilees, those are all pie in the sky things, in my opinion. I don't think there's any real, magic bullet out there that they can just simply shoot and fix everything. So I think we're in for more of the same. And it's just a matter of pace. How rapidly do we end up spending money in 2025 compared to 2024? And how much growth do we get out of the economy? I know there's an awful lot of optimism with Trump coming into power again. And I think that will roll forward.
Yep, for sure. All right, we'll be back with Fred Dashevsky after these important messages. Stay with us. You're going to love this next segment. All right, we're back for the last segment with Fred Dashevsky, uscoincapital.com. If you are not investing in gold and silver coin right now, you need to be. And I just wonder, Fred, and thanks for joining us for this segment. Recently we found out that in Seattle, businesses are shutting down over a new law with this celebrated passage of this massive minimum wage hike in the city of Seattle. And of course, social media is ablaze with comments chiding Democratic Representative Pramila Jayapal of Washington State. Say, what are you, an idiot? I mean, this is the thing. She's out there extolling the $20.76 of an hour minimum wage, one of the highest in the country. I'm so proud to represent a city that puts workers first. And of course, the critics are excoriating her and saying, do you understand the unintended consequences of these policies? I mean, Fred, you know, what do you do to protect yourself from stuff like this? If you are looking at the bigger picture, you're going to shut your business down, having to pay all these people big money like this?
Well, you know, that expense has got to be passed off somewhere. You know, everybody wants to say, oh, everybody should be earning more money. Okay, well, that's all well and good, but where does that come from? So if we're going to take it out of the profits that a company is generating by paying wages, we have a problem there. So generally speaking, what happens is the company, let's say they're selling a product or a service, they have to raise the price in order to be able to pay the workers this higher wage. I don't dispute the idea that people should be earning that kind of money in the economy that we're in now. I mean, or the idea that we should promote a better hourly wage for average people. But you can't simply do these things one-sided. It's the same problem on the bigger picture that the government faces. You know, it's all well and good to talk about raising more money from the government, but what does that mean? Does that mean increasing everybody's taxes? You know, it's not as if you can do one without the other. Everything comes with a cost. So if you're going to be on the side of the labor force and the working person and promote the idea that they should have higher wages, you also have to be able to figure out how the company that's paying them is going to make up that gap. Now, if you're suggesting that it's a company that's making, you know, so much money, like one of these big banking companies or even like a Tesla or something like that, where the profit margins are huge and they can afford to do that and it won't impact their bottom line to the point where they have to make changes to the cost of goods, yeah, that's fine. But that's not what we're talking about. You're talking about a city in a particular state try to make an average economy work better for the labor force, but still, how is that supposed to be paid for? Are those same people willing to now pay more money for all the goods and services that they buy from those companies that are now going to be paying these higher wages? How does that work?
I mean, can you imagine the Seattle area Starbucks out there charging, you know, $50 for a latte now because of the fact that, you know, these workers are getting $20 and some odd cents an hour minimum wage? It's like, well, you know, I mean, Starbucks, that's where they started out, but, you know, there's a lot of people that think Starbucks is about as woke as Allstate. And, like I was saying earlier in the show, I did cancel my Allstate policy.
Okay.
You know, because I think everybody needs, yeah, that's right. We walk away, you know, speak with your dollars. And speaking of that, we already have heard that Elon Musk's Starlink is going to be made available on United Airlines here shortly, come springtime, which that may be a good thing. The other thing I'm looking at, we're talking about the gold and silver coins. We're talking about the economy and why it's necessary. I'm wondering if all hell breaks loose, how are they going to enforce the payment of property taxes when we have currency that is, you know, I mean, if the dollar crashes, how are you supposed to pay your property tax? I mean, they can accept gold and silver coin. I mean, do we have a back end plan for this? I don't think anybody's thought of it.
No, we don't. You know, so basically, if we have a problem to where the value of the dollar becomes so suspicious that, you know, counties won't accept it as a form of payment for things like property taxes, that is going to cascade into a disaster. I mean, you know, it's a domino effect. It would just come crashing down on the entire real estate market if that were the case. And of course, that would bleed over to just about everything, because if the dollar has gotten that weak that you can't pay your property taxes. Well, that also is going to be translating into the dollar's problem in paying for just about everything at that point. I don't see how we could survive if we get to the point where the dollar loses that much value that, it's no longer acceptable as a method of paying off bills. That would just be an unbelievable disaster. And, look at what happened last year. We inflated the crap out of money in order to move the economy forward. And there's that expression that a rising tide raises all boats. So what happened last year? So the price of gold went up 26%. Even the S&P 500 went up 23% last year. Everything floated up because we pumped all this money underneath the economy to move everything forward. And then that comes with the cost, which is the inflation of the money by pumping it all into this economy. Now we've diluted its value, so its purchasing power goes down. We can continue to play this game, but I hope we never get to the point, Dave, honestly, where my county won't accept me writing a check to pay my property taxes because they don't think the dollar's worthwhile. I mean, I know I could deal with it. I could convert more gold and silver coins I have, and maybe we can negotiate something, but nobody is set up to deal with that. I mean, this would just be a complete disaster if we get anything close to that happening.
Well, and this is the reason I bring that up, Fred, is because Zero Hedge just put out an article about why property tax is illegal. And I mean, we're going, okay, now we're really starting to get into the crux of how people are losing their properties because of non-payment of taxes. And, there's those 12 states out there in the union that basically once they sell your house for taxes, even if they sell the house for $65,000 like they did in the Tyler case, which went to the Supreme Court, she only owed $12,000. They took and sold her place for $65,000 and kept all the money. Didn't give her anything back. And it's like, okay, the government had to step in and say, there's something wrong with the DEI, the equity that's going on here. But, only in this administration that's currently in power, do you see any change in, and I know that the U.S. government can't control property taxes and whatnot, but do you see anything locally with the economy, and what people can do as far as consumers and property owners to stop this increase in property taxes, given that we're seeing the market in many areas starting to tank, including real estate prices?
Well, I haven't seen real estate prices tanking here, although, again, real estate is very local. But I don't know that there's much that individuals can do. I mean, property taxes are generated by the counties in order to, like any form of government, cover their expenses and costs. Mostly they always have a delineation of where those funds are supposed to be going, and they'll spell it out for you and say, well, this percentage of your property taxes is going towards education. And it goes into the schools and it pays the teacher's salary and it does this and that and it finances the following projects. Unless those projects and the cost of them go down, I don't see property taxes dropping very quickly in any community around the country. And as, of course, the value of real estate goes up, the counties are collecting more money from the properties because they are basing it on the value. So we always get those reassessments, as it were, every few years, and they say, okay, well, the value of your home has now gone to this, and therefore your new property tax bill has also risen. I don't see that coming down anytime soon. I find most governments are not efficient and tend to spend more than they bring in, and if they are smart enough to be able to manage a budget, not deficit spend, they pretty much need every cent coming in. I just don't know that there's much an individual can do on the level of, addressing it from the county side. I only think the possibilities exist for people to try to make sure, they secure themselves their ability to make those payments as they're needed by making sure they've diversified their assets and, just keep up with what's happening in the economy, which is, this inflation of paper money and the fact that, government will inevitably have to print its way out of all of the debt that it's acquired to this point as we start, 2025 with about 36 trillion in national debt, and we're adding again
federal debt, actually, yeah,
and about $1 trillion being added now every 100 days. That to me is probably the most staggering statistic to come out of 2024. We've now achieved this thing where, not only are we adding $1 trillion to the national debt, it's not happening over 10 or 20 years. Every 100 days, we're adding another trillion onto the debt. It's going to make the interest payments absolutely insane and difficult to manage. And as I said, 2023, I think is when I first said this, we will be $50 trillion in debt before 2029 is over. And at that point, the carrying costs, the interest payments alone, are going to be pushing $2 trillion. That's going to become incredibly difficult. And that's going to require either government slowing down its spending, or guess what, folks? They're going to have to raise your taxes again.
Ouch. Yeah, they didn't want to hear that today. But anyway, so as far as the deals with gold and silver, do you have anything going on for the new year?
Probably the best thing to start the new year is going to be the basic silver, like half dollars and quarters and dimes, because the one major thing that came out of 2024 in the coin world was the compression of the prices that these coins are selling for over their metal value. It is as tight to their metal basic value as it has ever been in my career, which means that they're much more affordable than they've been, and they're selling for premiums that make them comparable or even less than bullion bars. So coins are extremely undervalued right now and can be bought for just slight premiums just over the metal they're made of. So
you gotta love it.
Silver, give us a call.
Yep, 1-800-878-2646. In the meantime, God bless you and God bless the United States of America. See you tomorrow.